It's a fantastic deposit that continues to grow. We're a near-term producer and we have an early revenue opportunity and a great partner. They're the four key takeaways for me on this project. And maybe a fifth one, very undervalued.
Thank you for joining today's webinar with Leo Lithium. I'm Dannika Warburton. I'm the Principal of Investability, and today I'm delighted to be joined by both the Chairman and Managing Director of Leo Lithium. The purpose of the webinar is to provide an open forum for investors to have direct contact with management. So without further ado, I'll hand over to you, Rick. Thank you.
Thank you, Dannika, and good morning or afternoon, wherever you are. My name is Rick Crabb. I'm the recently appointed Chairman of Leo Lithium, and I'm delighted to be presenting this investor webinar with Managing Director Simon Hay. For those of you that don't know me, I'm a resource and corporate lawyer by background with over 30 years experience. But importantly, I've had many years experience as a shareholder and chairman of a number of resources companies operating in Australia, Africa and Asia. Goulamina highlights, this page really captures a lot of the primary reasons that I was so excited to be invited to join the Leo Lithium board. The Goulamina deposit is amongst the world's largest spodumene projects. We're targeting stage 1 annual production of some 506,000 tonnes per annum. Stage 2 will increase this to 831,000 tonnes per annum. So it's clearly a large-scale, high-grade ore body with significant exploration upside. And this exploration upside is evidenced by today's announcement on the Dannika drilling results that Simon will talk to. Also, the project has excellent financial metrics. It's got an NPV of some $2.9 billion US. And this is using very conservative pricing for spodumene. We'll also be pursuing a direct shipment ore product in the next, within some time next year, which we'll detail as we progress. The other important factor is that we have a world-class partner in Ganfeng, which is China's largest lithium chemical producer. The Ganfeng arrangement has provided the project with US $170 million in funding by equity and debt, details of which we can elaborate later. And through their arrangement, we've also secured offtake for stage 1. Obviously, the other important factor in my mind for joining the board was the extensive operational experience that the board and management has. I'd encourage you to check the website for details of all board members, including myself, but obviously led by Simon, who has deep lithium experience. We've got a board that's got extensive experience in operations, geology, environmental management, and legal with myself. And we are currently recruiting an additional director that will complement these skills at the board level. Also, with the management team itself, Simon has put together a fantastic team. They've got technical competence, they're very experienced, and in my view, the organisation is structured very well for success and also to appropriately manage risk. So again, check their details on the website. So perhaps we'll next address the Firefinch situation. As you know, Firefinch was the former parent of Leo Lithium, and currently it holds approximately 17.6% of the shares of the company. Firefinch was the 80% owner-operator of the Morila gold mine, and it recently announced that they were no longer funding that mine in Mali. And you would have noticed a Firefinch announcement today, which elaborates a bit further on what their future plans are. Look, Firefinch doesn't have any representation on the Leo board. There are no common employees or business interaction. There's only a handful of common suppliers, which again has no impact on us. So the main point is, as Simon can elaborate from his recent visit to the country, the Firefinch situation, in our view, has no impact on our project whatsoever. Now, Firefinch is looking at options available to deal with Morila and the Leo stake. But importantly, these shares that they hold are escrowed by the Australian Stock Exchange listing rules until June 2024. That means the shares can't be traded, they can't be used as security at all until June 2024. The only very limited circumstances where there might be a release from escrow is if there was a change in control of Leo. So the perception that there's an overhang of shares as a result of the Firefinch situation, in my view, is just wrong. And if you look at the Firefinch release today, it reiterates the fact that the shares are restricted. They can't be traded in any way until June 2024. And it may well be that Firefinch just holds those shares and distributes them to shareholders when the time comes. But other than that, we'll monitor the situation, we'll act in the best interests of our shareholders, but we're not concerned about the impact of Firefinch. Now I'll hand it over to Simon to dig into some more detail about our project and future activities.
Great, thanks Rick. Great to have you on board. Firstly, onto the deposit. Of course, we know we have a fantastic resource at Goulamina, very high grade, large scale, clearly sits in the tier 1 quadrant of global spodumene deposits. And we're intending to grow the size of our resource bubble and move that to the right on this chart. And we'll certainly see that in coming slides. I think what's also really important about this slide is the developers, those projects that are under construction, are relatively few. There's only a handful of spodumene producers and only a handful that have actually made it into construction. So Goulamina is one of the few large-scale, high-grade resources that is currently being developed. We did release our Dannika drilling results this morning, and you can see that we continue to reveal the exceptional scale and potential of Goulamina. The drilling has been completed at Dannika, and the assays, 99% have been received as well. The resource restatement is tracking really well. But one thing I do want to point out on this slide is looking at this cross-section and to bring to the fore some of the key points. In this campaign, we've drilled approximately 100 metres deeper than previous drilling campaigns. And you can see on the cross-section, the 2 diamond drill holes that are in the centre of the chart and have gone to the greatest depth, have gone, as I said, 100 metres past previous drilling. And those 2 diamond drill holes continue to reveal pegmatites, thick, intercept, coarse-grained, mineralised spodumene in the pegmatites at depth. So this again shows the great potential of Goulamina and the Dannika domain. It's still open at depth, and also importantly, it's not pinching out as we see often in other pegmatite deposits. It's still quite thick at depth. So we're really looking forward to these final assays coming through, but you can see tremendous grades throughout, 47 metres at 2.43%, just calling out one of them there. And that backs up some of the earlier drilling results from Dannika that we released in October. The resource restatement, it is tracking really well. We're quite likely to finish it in the next few weeks. There's little to be gained in releasing it in late December, so it's likely that we'll complete the work and release it in mid-January. But the work is tracking really well. 2023, our attention will switch to the northeast domain where 80% of the resource is located. Again, drilling is well advanced, assays are starting to come through, and we'll have those results, the first results, probably in the middle of January. We continue to expect great news flow and positive results coming out of the drilling program. Onto the project itself, and also it's tracking really well. Project remains on schedule. You can see we're roughly halfway through engineering, drafting, and procurement activities. I was at site 3 weeks ago myself, and could really see a really good camp, great catering, loved the food on site. We had a happy team. The earthworks contractor is on site, fully mobilised, and have now put on a second shift. Most recently, we've got our project director, Tom's on site this week, and the night shift has started on the earthworks. So that's terrific. we expect to see the first concrete pour in a matter of weeks as well. Just a couple of action shots on site. The priority areas, first of all, are the process plant site. Of course, that's where we need to put down the first concrete pour. So that's been cleared, levelled, and compacting is underway. We're also working on the TSF dam location and also borrow pits and laydown areas for the receival of equipment. So first major contractor underway and advancing on plan. The schedule shows first production of spodumene concentrate around the middle of Q2 2024. So first ore to the mill is around April, and first spodumene concentrate around May of 2024. 2023 will see pretty much all construction activities. We'll have a lot of activity on site, workforce of over 1,000 people at that time. And we expect the project to ramp up through the second half of 2024, full production at the end of 2024. We're starting to look at, in a little bit more detail, stage 2, and what that looks like. So we're launching a concept study now, and we will commence early engineering works throughout 2023. Our thinking remains that stage 2 will come online around 12 months after the ramp up of stage 1. So a lot of activity happening across multiple fronts in regard to the project, but we remain on schedule, which is terrific. A few weeks ago, we started talking about the DSO opportunity that's in front of us. And this opportunity is really attractive whilst lithium prices remain at elevated levels. And we're now really providing a fair bit more detail on what we plan to do with DSO. The advantages are numerous. You know, when we talk about de-risking of the commissioning of the early drill and blast, mining and crushing operations, it's great to get an insight into how those functions will work early, ahead of time. So that's a real advantage of DSO. Secondly, logistics. I'm much more confident in commissioning and starting the logistics chain on ore rather than our high value product of spodumene. So this gives us a chance to engage early with trucking contractors, maybe trial a few out on ore before we commit to the spodumene concentrate contracts later on. The schedule shows that Q4 is quite feasible, Q4 2023 for first DSO shipments, but the team is examining bringing that forward to Q3, so bring it forward a solid 3 to 4 months into the middle of the year. We certainly know our port operator will be ready from the 1st of July, so that's a target for our team to see if we could have DSO available at that time. Just on the planning, we expect over the next couple of months to really firm up the plans, and so around February next year, we'll come back to the market with some information on DSO. A little bit more on our operating plan. You can see here we've got a separate pit and ROM pad area for DSO, and this is deliberate to keep it separate to stage 1. We don't want DSO to interfere with the schedule, construction activities, or anything to do with stage 1. So we're separating the two physically, and also in some ways through the project as well. We've got a separate team working on DSO at the moment. There is overlap, of course, but where activities become bottlenecked, we'll have more people. We'll bring in dedicated resources to DSO. Government engagement is underway, and the government is very supportive of DSO. I'll talk more about that a bit later on. Of course, DSO brings financial advantages as well. The key one is that if we can bring it online early enough, we can conserve our corporate cash and just bring the cash from DSO straight back into the JV, and that can be used to help fund the construction and commissioning costs and ramp up and working capital of the JV, and we can conserve the corporate cash for other activities for Leo to use. So that's another key advantage of DSO, but also the timing, what drives our thinking around trying to accelerate it into the middle of next year. We've got some indicative operating financials there. We think the operating range is around $260 to $300 per tonne delivered to Abidjan. Sea freight, we've got a recent quote at just sub $50 per tonne, per wet metric tonne to a China main port. And if we just go off a recent market price for DSO, which was approximately a similar grade to what we would expect to produce at Goulamina, you can do the numbers yourself and see that this would be quite a profitable operation. Of course, the caveat is we would only do this if it is profitable. So very much we will wait and see what the pricing is at the time before we would commit to DSO. But even if it's break even, I think all those commissioning benefits that come along with DSO are worth pursuing. Logistics, we recently talked about our first contract that we've signed, which is a 250,000 tonne per annum concentrate storage and export contract at the port of Abidjan for a 10-year term. This is a key element for us. It enables us now to focus on the next step, which is to put in a second export port, and that's for risk mitigation reasons. And also we are now starting to engage with trucking contractors that can give us a mine gate to port service. So this will unfold over the next 6 months or so. A lot of work happening here on both those fronts, the second port and the trucking contractor. I was in Mali recently. Number of purposes of the visit. Firstly, to meet with the Minister of Mines, which I do on every trip. But this time we had the pleasure of having a Ganfeng representative with us on the trip. And that was their first visit to the site and to the country. So we certainly introduced Wembo around to all the key people in the project. The Minister of Mines continues to be very supportive of the project, not just in words, but in deeds as well. He was really pleased to hear of DSO. It's great that there's, for him, it's a tangible step that we are, pushing into production quickly, that jobs will be created, and, secondly, for the government, that revenue, royalties, taxes, etc., will start to flow. So he was really happy and supportive for anything that he could do to help us on this project. The government has not exercised its right to a 10% free carry stake as yet. There is no time frame for this. They will do it in their own good time. We have initiated the process, but it's now up to the government to take the next steps. On the community side, we met with the local leaders from 3 close villages. You can see there we've already got over 230 employees, 68 from the region and 160 odd from other parts of Mali. So you see the project is really ramping up quickly. That's up from sub 100 only a month or 2 ago. We also committed to a few infrastructure projects around water and roads in the region. And throughout 2023, we'll be further developing our sustainability program. Our contribution to the region across many different facets will grow over time, and we start with developing that framework next year. It's actually starting this year, but we'll start to publicise it next year. So we enjoy an excellent working relationship with Ganfeng. Their converter project is progressing rapidly, as you can see here. We hope to visit the site next year when China opens up. We do get a number of questions on the offtake, so I'll address them here. They do have 100% offtake for stage 1, life of mine. The pricing is based on, it's a formula-based calculation in the offtake agreement. It's based on lithium hydroxide and carbonate pricing, not on spodumene pricing, and it's a spot and quarterly index prices that feature in the formula. And Ganfeng have 50% of stage 2 offtake, again for life of mine. What Leo is looking at for each share of stage 2 is a number of options. All options remain on the table, and we're about to kick off a study into what we do with that offtake. We'll focus on all options, as I say, including downstream conversion, and that will include looking at a location for a converter, technology, and potentially partners on that conversion opportunity. So this again will unfold over the course of 2023. And in conclusion, I'll leave you with our corporate strategy slide, which the board recently endorsed. And I think this is a great encapsulation of what Leo is about. It's not just Goulamina stage 1. There's a lot more that we are working on. So of course, stage 1, first product in less than 18 months, but 2023 will see a lot of development across the other 3 pillars of the corporate strategy. So we will pursue the DSO opportunity. Stage 2 kicking off, I've just talked about, downstream options to be considered, and also further growth through exploration, both at Goulamina and potentially further afield. So a lot of great news coming, a lot of good progress to be communicated across next year. So with that, I'll throw it back to Dannika for questions to kick off.
Thank you so much, Simon. Simon, perhaps you could answer or provide some color around the current situation in Mali and any real or perceived geopolitical risks around the supply of equipment and getting spodumene from site to port.
Sure, Dannika. Well, first of all, it's calm and stable. You know, ever since I've been going to the country over the course of this year, the government, the bureaucracy has functioned as per normal. The gold industry, for instance, in Mali has operated very stably throughout the current situation. Other key developments, ECOWAS sanctions are no longer in place, so equipment and people traveling freely throughout the region. The government has committed to a return to democracy over the next 14 months or so. That will culminate in presidential elections in 2024 in February. So yeah, it's a difficult country, but you know, the mining industry continues to operate very stably, and as I've said on numerous occasions, we get great support from the mines department and other departments in Mali. So yeah, it's not hindering the project in any way.
Yeah, and if anyone wants to check out Leo Lithium's LinkedIn, there's a bunch of recent photos that we've put up on the government relations and community engagement that you've been doing. But moving on to a question on Ganfeng, can you provide details around the 100% offtake agreement and how it's structured? I know you covered it, but could you speak to the upside for Leo in this agreement?
Well, yeah, I think, as I said, it's 100% offtake for stage 1. So Leo has stage 2, 50% of stage 2. Stage 2 is currently 300,000 tonne per annum of spodumene. So our share is 150,000 tonnes. That's significant on a global scale when you think about some other producers that will be coming into operation. That's their full production or thereabouts. So it's significant by itself. Secondly, it's enough to power or to supply one lithium hydroxide train in a complex. So we could produce 20 to 25,000 tonnes of lithium hydroxide just from that share of the stage 2 offtake. That's one key advantage I would say the offtake gives us. Secondly, the pricing formula is related to lithium chemicals only. So there's no spodumene input into the pricing formula. It's hydroxide and carbonate and a spot basis. So it will follow lithium chemicals pricing on a relatively close tracking mechanism. There's some of the key advantages, I think, in the pricing mechanism that we have with Ganfeng. And the other thing is they're a great partner. They have a rapacious demand for the spodumene. They're building multiple plants in China. They need our product, and we're really keen to deliver it to them as quickly as possible.
I'd add that although obviously it's the case with a lot of offtake arrangements, either in this commodity or others, there's confidentiality obligations involved. But having sort of come on board and had a look at the offtake arrangements, we shouldn't discount the benefit of the cash flow that will come from stage one to Leo Lithium. So I'm satisfied. It's a very well structured and a very fair arrangement with a fantastic partner.
Thank you, Rick. And while I've got you, I might address Firefinch again. I know that you touched on it at the beginning of the presentation. And as you're well aware, many investors that are invested in Leo were previously or still are invested in Firefinch. Can you come on a bit more around what's happening with respect to Firefinch's 17.6% holding in Leo, and maybe just address any concerns that investors have around potential risks?
I think, as mentioned, there's a wrong perception that the shareholding can somehow be dumped onto the market. So it has been announced that Firefinch did go to the ASX and ask them, is it possible to have their escrow released? And that was categorically rejected, as I expected it to be, having had some experience in these areas. So those shares, they're just locked up until June 2024. So they can't sell them, they can't secure them. And, as Firefinch has reiterated this again as early as today. Now, come June 2024, we're going to be producing and up and running, so that if the shares are then distributed to their shareholders or whatever happens, they can be easily dealt with. It's in no way a present overhang to us, and we're satisfied that, especially from Simon's recent visit to country, that it has no impact on us in our project activities. But we'll continue to monitor the situation, and we'll look after Leo shareholders to the extent we can.
Thank you for that, Rick. Moving along now, you touched on production and potentially fast-tracking that with the DSO operation. So, Reg, thank you for your question. I will read it out. Reg has asked, are you able to provide any guidance as to the possible volume of DSO that you might look to sell, and what would be the possible timing for the first DSO sales?
Yeah, so Dannika, the starting point is we'll do two 30,000 tonne shipments. And why that number? That is what we expect to transport our spodumene in, 30,000 tonne shipment sizes. They would be, at full rate, we'd be doing one every 3 weeks. So that's why we're targeting 30,000 tonnes. And we want to do two at least to test the whole loading system more than once. That's our starting point. What we would do is we would monitor the cash that would be generating. We would monitor how the operations are going, and certainly monitor the price that we would be receiving to make a decision, an informed decision, on whether we continue after 2 shipments. But we're not committing to anything more than 2 at this stage. And but of course, if everything works in our favour, we would be likely to continue it. If I look at, and then the other thing we would have to pay close attention to is commissioning of the full plant. So we need ore on the ROM to put that through the plant. So we certainly wouldn't want to be robbing the process plant and that commissioning ramp-up curve of any momentum. So that's another key factor. If we then look at timing, our base case is that the first shipments would be around October, November next year, so 10 months from now. And we're looking to accelerate that. We will only find out what is possible as we engage with the key contractors. So the drill and blast, mining and crushing contractors, and trucking. So 4 key contractors that we need to have engaged. And we expect that will take at least a couple of months. We talk about our procurement processes on stage 1. The mining contract we're letting around February next year. So that ties in well. We then talk with those contractors and say, hey, can you mobilise early? Can you mobilise part of your fleet early for this DSO opportunity? If not, because we've partitioned the site, we'll be able to bring in secondary contractors potentially to pursue DSO whilst stage 1 continues unhindered by DSO.
Okay, got it. Thank you very much for that. I guess speaking of DSO and maybe now tying into the lithium price outlook, do you have any comments on where you think the short to medium term supply and demand market sits for lithium?
Short term, I think what we can see that a lot of other industry players have talked about, prices are sort of flatlining, maybe a little bit soft. To me, that reflects the typical seasonal factors with end of year and Chinese New Year. So one thing I would definitely say is that raw materials, so spodumene, remains very tight. So there's no, not that we can see, any accumulation of inventory on spodumene. Slight inventory build in downstream chemicals, but that, as I say, it's seasonal as China sort of prepares for Chinese New Year. Next year still looks very positive for us. We can see, you know, Ganfeng, as I've talked about, are really keen on us accelerating the project. They will help with DSO sales, so potentially the lithium units will end up with Ganfeng, but we'll also look at other options as well. We'll certainly make sure we get a market-based price for the DSO, but really happy for Ganfeng to be helping with the sale of DSO. So in broad terms, small amount of softness right at the moment, but it looks really strong for spodumene now and into next year.
Okay, and in light of that, what's the board's view on the current share price and valuation of Leo Lithium?
Well, it's horribly undervalued on the market. Clearly, if you just look at the metrics, so it just seems to be influenced by perhaps some softening of the lithium price, and a number of other lithium players have probably their share prices come back. I think all of them, it's unwarranted, but more so in our case, obviously the Firefinch situation has thrown out a lot of confusion, which hopefully we can dispel, and will encourage the investing public to have a look at the fundamentals of the project, of our company, and the so-called Firefinch overhang is just not a factor at all in our view.
Okay, there's been a couple of follow-up questions around what you're doing to gain current and prospective shareholder confidence and value creation. I guess things like this webinar where you address those misperceptions head on a one factor. Is there anything else that you wanted to touch on that you're doing in the back end around the marketing of the company?
Well, look, I think there's the key one is delivery of the project and all the other the key items that I've talked about, other parts to our strategy. So we have a great deposit. Let's execute on that. We're putting the team together now. We've just completed the recruiting of the executive team. So with Tim Richards joining us as COO. So that's fantastic. He'll have a lot of focus in front of him next year on building up his operating team. Key focus, of course, is DSO. That'll be taken off the project team and given to Tim to execute. So I think the key one is execution. I think DSO certainly solves any sort of funding shortfall question that is out there. As I've said, where the project is on schedule, it's on budget at this stage. We are tapping into the contingency amount somewhat, but DSO would certainly address any funding shortfall. We'll be doing a bit more marketing next year. attending a few more conferences, but really it's around communicating what we are delivering, because we have a great asset, we have a great project.
Okay, so if execution is going to drive shareholder value, can you provide an overview of, again, I know you went through it in the presentation, but just because we've received so many questions on this, the project timeline and progress for engineering and procurement and site construction contracts, and just a little bit about that sort of the pathway to production, I suppose.
Yeah, looking at it in key chunks, 2023 is around construction of the plant. So we start to see equipment being delivered to site in Q1, sort of late Q1. So we're preparing the site location now. We'll be pouring concrete for receival of equipment onto foundations. So that's key. The ball mill is tracking quite well. That's going to be finished in January, February. It's another month or so on a ship and then more time to get to site. But that key part of the critical path was the ball mill. That is tracking well. The other equipment that is being fabricated in China is on track. We've lost, every now and then we seem to lose a week in a particular package driven by COVID lockdowns. But the suppliers have been able to say, no, we'll stay on schedule. They then put on a night shift. They then accelerate to get back on schedule. So COVID lockdowns not affecting us in China. Now, a COVID wave, that's yet to be encountered, but if people get sick, that businesses need to adapt. But so far, equipment supply is on track. Some of the key packages that are being negotiated at the moment or being reviewed. So we have the power contract is under review. That tender closed only about 10 days ago, so we've still got a fair way to go through there on selection of equipment and awarding of that contract. What are the other key ones? Mining contractor I talked about. We have 3 on the short list for that one. That's well into the adjudication phase. There's been a number of site visits, firstly to Goulamina, but also to those suppliers to look at their operations and at other sites. That will continue early next year. So that's another key contract. So yeah, if I look at 2023 construction of the project, then we move into commissioning and ramp up in 2024. We've started thinking about operational readiness. We're still a year away from that, but we're doing the plans on selecting the operational readiness contractor that can come in and help us commission, put maintenance systems in place, etc. So lots of work happening across the full project function. Just to bring it to a close, when we get probably towards the end of Q1, early Q2 next year, that's the stage when most of the contracts will be let. Leo will then have a really good understanding of what the capital cost will be, because we'll have the final numbers coming in, and we'll come back to the market at that time with our view on what the capital cost will be after, as I said, all numbers in.
Yeah, so still very much targeting first production in the first half of calendar year 2024. That's correct.
Yep. So that it means that 2023 will be a year with quite a lot of news flow coming through, not only on several levels. As we hit milestones for the development, there will be further drilling results on both Dannika and the northeast domain. We'll have a resource upgrade. There will be some work done on stage 2 and obviously the DSO. So it'll be a busy year next year on several fronts. So it's not a company that's just plodding on with a development. There's other activity happening around it.
And subsequent to production, you'll be generating a lot of cash, presumably. Have you put any consideration towards the payment of a potential dividend in the future?
Look, Leo's going to be in a capital intensive phase for at least another 3 years, so 2025, 2026, when we will be building out stage 2, and then who knows what what we decide to do with downstream conversion. So we have a great opportunity to build a big company here. 800,000 tonne per annum spodumene project, potentially leveraging our offtake in stage 2 into a conversion business somewhere. So that will be capital intensive for a period of time. Beyond that, we would only do that to generate returns for our shareholders. So beyond that, we would certainly need a capital management plan, but it's too early for that to be considered.
Okay. There has been a few questions on future expansion. However, people seem to love to look into the crystal ball. You touched on exploration drilling and the resource update coming out in the new year, and there was the announcement out this morning on Dannika. But what is the company's strategy in relation to expansion past stage 2 and potential acquisition or anything else, if you're able to comment on that?
Well,
I think as Simon has said, we're here to build a substantial company, and we can do that on the baseline that's created by the Goulamina project that will throw out significant cash. Simon has resourced the team to be able to expand activities. We think there's a great opportunities within this particular space. And I think as noted in our sort of broad outline of the 5-year plan, we will look to other projects, other activities in this space in due course, but we'll do that in a measured way. The board and management are already discussing that, but stage 1 of the project is forefront for us. So we are here to build a substantial company.
Okay, and do you have any plans to list on other exchanges? You've got Frankfurt and ASX now, but a few people have asked whether there's plans to list in Canada or USA.
Not at present. That things like that will be considered in due course. Obviously listing on another exchange is an expensive process. There needs to be advantages for us. The Australian Stock Exchange is a senior exchange in the world, and most investors, no matter where they're located in the world, will invest on the ASX. So that's our principal listing at present. And the Frankfurt exchange is sort of handled by the people over there. So it's not necessarily something that the company institutes itself. It's a common activity and opens us up to what is an interesting market.
Absolutely. So we're sort of running out of time. There's 2 more questions that I'll put forward to you. On the forward focus for 2023, as you outlined in one of the slides in the presentation, can you just summarise again what the expected news flow is for investors coming into 2023?
Yeah, if I just look at Q1, so Q1 will have the Dannika resource restatement in the very early stages, plus also the drilling results from the northeast domain. They'll start to filter through. We'll have around February, we'll have the DSO, a bit more detail from what we've released here, and potentially a firm commitment to push forward with DSO, but narrowing down contractors, costs and schedule. We'll have regular project updates throughout, of course, and I also mentioned earlier, sort of late Q1, early Q2, we'll come back with what the capital costs look like once we've got the majority of the packages have been awarded. They're the key ones in the next 3 to 4 months. Mid-year, we would expect if DSO gets underway, there would be certainly a ceremony at site to kick that off. The government and community would be really supportive. We would certainly like to have a board visit and also investor visit as well. So we expect to bring analysts to site sometime throughout 2023. We'd like to get our airstrip commissioned for that first. But that would be another key moment throughout the next 6 months or so.
Yeah, that's fantastic. Lots happening. So thank you again to everybody who joined for the webinar, and we really appreciate your time and all of the questions that were sent through. It's just been an overwhelming response. I hope that we've sort of touched on the broad themes. I guess to leave with Simon and Rick, are there any final comments that you wanted to leave investors with?
Well, I just think the takeaways from me are it's a fantastic deposit that continues to grow. We're a near-term producer and we have an early revenue opportunity and a great partner. They're the 4 key takeaways for me on this project. And maybe a 5th one, very undervalued.
Okay, well, as a shareholder, I wish you all the best, and this recording will be available for those who want to rewatch. So thank you again for joining, and thank you for the support.
Great, thanks everyone. Thanks, Dannika.